And ladies and gentlemen, we are back with the PulseWave report for trading on Sunday, January the 29th, 2023. All right, so hopefully everyone is having a wonderful weekend, and let's just jump right into these charts. All right, so the first one we're going to examine is the Bitcoin future, see how it finished on Friday. And you'll notice that it had a crash alert coming into Friday, but the market decided that it was going to rally. And that's exactly what happened before pulling back slightly into the close, but staying well above the 23,000 mark. Well, as you know, the PulseWave reports are out. So if you go to pulsewavetrading.com and check your browsers, you will notice that the reports are out. And you will notice that Bitcoin is rallying right now. So it's doing rather well. So we can expect a possible gap up on the opening for the Bitcoin futures. And that's exactly what the market is looking like. We're going to see on Monday. So very interesting turn of events, and we'll see what can happen. I know this gap here is a little bit of a concern, so I don't know how much higher we're going to go first, but we also have this neutralization bar coming out. So interesting turn of events, but we're going to take what the market gives us for now. Can the market still roll over here? Of course it can, and we'll be ready for that eventuality as well. So good right now. We're in a bullish zone, and we have bullish momentum, but this neutralization bar is coming out. So we could just kind of consolidate with a bullish bias for the next couple of days. And that's the Bitcoin futures. All right, looking at the next chart, Ethereum futures. All right, so Ethereum futures have been sideways with a bearish bias, and they're still in a bear market overall. Need to change that. Hopefully it can and will, and then we can start to see some upside production. But for now, the momentum is still negative. So hopefully Ethereum will catch a bid here, which it's in the cash market. It is doing. It is rallying over the weekend. So this should be a gap up on the open for Monday as well on the futures. All right, next up we have, let's take a look at what the gold miners did on Friday. And taking a look here at GDXJ, we had a crash alert coming into Friday, and we did get some downside production. And it has also given us a crash alert for trading on Monday. Top of the Kumo cloud around the $35 mark is the downside initial target for the gold miners. Looking at gold itself by way of ticker GLD, we had a crash alert coming into Friday, and the market moved sideways. Really didn't give us any downside production at all. Just a few pennies. But we also have a crash alert from Monday for GLD. All right, so now let's compare our equity side to the future side. All right, so here is the gold futures. And you'll notice that we did have a crash alert Thursday, got a smidgen of downside production on Friday, and it's calling for downside crash alert for tonight into tomorrow's trading, with 1800 down here being the initial downside target. We'll make it a range, 1850 to 1800. So looks like the current bear market rally could be over temporarily as we are preparing for the market to roll over. All right, so we will be watching gold for that possibility as well. All right, let's take a look now at silver, because if gold is going to go, then normally silver hitches along for the ride. So let's see if that is going to be a possibility. Let's go ahead and pull that up if I can find it. Give me just a second. Got a lot of charts open here. Let's see. It's around here somewhere. Here we go. All right, so here's SLV, and it gave us a crash alert on Friday. All right, and it did, fall. It gapped down on the open and fell, and then kind of rallied into the close, but setting up a crash alert for Monday's trading on SLV. Now let's compare that to the silver futures and see if there is a similarity there. All right, on the silver futures, we have a similar situation. So Friday gave us a crash alert for tonight into Sunday's trading for silver. And it's already there at the top of the Kumo cloud. So this one's threatening to fall below $23. All right, so yeah, there you go with the silver, and it's still in a bear market, and you have a bearish bias for silver. Yeah, silver is just really struggling here. Gold looks beautiful. That, any pullback in gold will probably be a buying opportunity. All right, here is Theta. Theta is trendless right now, as you can see. Got the ticking time bomb here. It's just a matter of time before it decides what it wants to do. But it has a bullish momentum to it, even though you're not getting a lot of price appreciation. So this could be a floor, and the market could be setting itself up for a rally. The top of the Kumo cloud at $1.70, we'll call it between $1.50 and $1.70 will be the initial upside target if we do see some kind of breakout move in Theta. So any upside potential in Theta, that's what we're looking for as an initial target. As far as XRP Ripple, all right, this one is in a bull market. The momentum, the trend momentum is bullish, but we have a bearish bias. All right, trend momentum bullish, but currently short-term momentum is to the bearish side. But you're also in the Kumo cloud, so we expect sideways to lower prices in your XRP Ripple. Not a lot going there in Ripple. All right, next up we got, let's see, let's do Chainlink. Here's Link. All right, so Link trend momentum reading is bullish, and it has a bullish bias, and prices are trying to rise inside this Kumo cloud. Top of the Kumo cloud, we'll call it $9 is going to be the initial upside target. Anywhere between I will say between $8 and $9. All right, and that's your Chainlink. Let's see, since we're on the crypto side, the last chart we're going to look at here would be Litecoin. All right, here's Litecoin. All right, so Litecoin gave us a positive bot check on Wednesday. And then here's Thursday's trading. And then what do we get? We got a gap up and a rally into the close on Friday. So very interesting that we got this bot check, and then all of a sudden prices explode. So perhaps this rally is about to be sold. Now, the interesting point is your trend momentum reading is bullish and your short-term bias is bullish. So perhaps this here, this negative bot check, was shorts covering. So that could be the possibility of what we saw. So we'll see. But right now it's looking bullish for Litecoin in the short term. All right, next up we have the US dollar index. Let's look at the cash index here and see what we got. All right, so this market has been in, the trend momentum has been bearish for quite some time, and you've had a bearish bias in the market for quite some time, but now that has changed. As of Friday, we now have a bullish bias within this bear market. So it looks like the beginning stages of a bear market rally in the US dollar. back-to-back rally alerts is what we got. We got Thursday and Friday back-to-back rally alerts. Bottom of the Kumo cloud at 105 is the initial upside target for the US dollar index. So could it finally be time to set a bear market rally in the US dollar? That's a very good question. It looks like we may get an answer to that here. How that translates to ticker UUP, the tradable US dollar index. Well, it had a rally alert on Thursday, got a narrow range inside day on Friday, setting up for a breakout rally on Monday. Bottom of the Kumo cloud around, we'll call it 2850 is the initial upside target for UUP. All right, next up we got, let's see what we're going to look at next. Let's take a look at crude oil. Let's do crude oil. And we'll start off with the futures. Here's the crude oil futures. All right, so the trend momentum reading in crude oil futures is bearish. And the short-term momentum of the market is also bearish. And we have a crash alert for trading on Sunday night into Monday morning. And price action is still inside the narrow Kumo cloud. So it could break down and break outside and break out the cloud. If it does, then it hits free fall. Once it drops below 75, it should be a quick drop to 70. All right. But you are consolidating inside of the Kumo cloud. All right, let's see how that translates to ticker OIH, which is our crude oil ETF. All right, and it goes a little something like this. The trend momentum reading is bearish for the crude oil ETF OIH, and the short-term trend momentum is also bearish. And we have a crash alert here for trading on Monday. Top of the Kumo cloud at $290 a share is what we're looking for as our initial downside target for OIH. All right, very interesting turn of events in a lot of these markets. All right, let's see here. All right, we've got a question. So usually Bitcoin goes up when the dollar drops. But if we go into a recession, with Bitcoin go up? That's a good question. And technically, a lot of economists say we're already in a recession. And then we've been in a recession. So leave it to them. Prices are doing, that's why, they don't know what they're talking about. At the end of the day, the US dollar is oversold. So we should get that technical bounce like I just showed you in the US dollar index chart. I showed you the Bitcoin chart as well, because according to the Bitcoin chart, we have all the potential in the world to continue to rally. But there's a gap that was done a while back that needs to be back and filled as well. So in the short term, Bitcoin could drop, fill that gap, and then explode after it does it. So the bear market rally in the US dollar may not be long-lived if it even gets off the ground. All right, here is the Russell My Hustle. Let's take a look at the US stock indexes. And you see the trend momentum is bearish, but the short-term momentum is bullish, which means we have a nice bear market rally in the Russell. And it's wide open for a continuation rally. All right, so the Russell has all the potential in the world for a continuation rally, as we just saw in ticker IWM. Next up, we're going to take a look at the NASDAQ 100 by way of ticker QQQ. And you can see here that the trend momentum reading is bearish, but the short-term momentum is bullish, and the market has a nice bear market rally that it is staged, and it is wide open for upside continuation. All right, so I see the NASDAQ and the Russell continuing its climb, its ascent. Looking at the S&P 500 by way of ticker SPY, the trend momentum reading here is bearish, and the short-term momentum reading is also bearish. And all you've done is basically try to rally back up to this drop. This bar from the week of December the 13th, remember that? That was that CPI number where the market rallied like 800 points on the CPI data. But then it crashed into the close, and then the rest is history, right? That's all this bar is. And it's not even a bullish pointer. So I can't see why price action will be attracted to it other than it's a previous high that the market wants to test. But the probability of it taking it out is another question. But so far, this is, like I say, bearish. And so, unfortunately, the S&P is showing you that rallies could still be sold here, but you haven't really rallied in order to even make it attractive to short. So $410 is the initial upside target zone, which equates to the old high here. So it needs to not just take it out on a spike high, but we need a close above this. It has to close above it. All right. Consecutive closes above that resistance point in order to solidify the beginning of a bear market rally in the S&P 500. I know it is what it is. All right, we got a comment here. I'm thinking Bitcoin hits 24,000 and retraces. The climb seems fake, though really weird low liquidity, and it's rising. Yeah, there's a lot of stew on the stove here. A lot of vegetables thrown into this stew. So I have to agree with you on that. It is sus right now. It's very sus, very suspect. All right, but we take what the market gives us. If it wants to continue to move up, we'll be long until it decides it wants to turn. All right, here's bonds by way of ticker TLT. And as you can see, the trend momentum reading is bearish, and the short-term momentum reading is also bearish. So we expect lower prices until this dynamic changes. So the bond market is still in a bear market, which means rallies will be sold. The market will continue to sell rallies until that pattern is changed. And according to what we have here, that's not changing anytime soon. Last but not least, with the stock indexes, here is the Dow Jones Industrial Average. The ticker is DIA. The trend momentum reading is still bearish, and the short-term momentum reading is also bearish. All right, now here's the interesting part about this. We got some upside resistance levels. All right, that's what we got going on here. We got it at $360 a share, $365, and $370. All right, so 360, 365, and 370 are our overhead resistance zones, and the stock is currently at 339. So it has a long way to go before it starts to hit the resistance wall. Right now, it's wide open. This should help propel the S&P 500, since the S&P 500 is the little baby of the Dow. All right, so as the Dow goes, so goes the S&P. So this is looking like we could be having a nice stock market rally underway here, and that would make all the proponents wrong, because the majority of people keep calling for a stock market crash. And as you know, the market likes to hurt it, the majority of people. It wants to hurt as many people as possible. So if the crowd is saying market crash, it's not going to crash. It's going to rally. It's going to rally hard, because that doesn't make sense. All right. And that's what the market likes to do. The market likes to not make sense. So everyone's calling for a bear market. We've been in a bear market. Where have you been? They should have been saying that back here. The crash, the smash, the flash. But instead, they're waiting until we had a successful bear market rally, and now they're calling for a crash. Really? Well, they're late to the party. I think the market's gearing up for a nice start market run, a big bull run, a big short squeeze. Now, that's just how I see it. All right. Now, let's examine the Bitcoin perspective. We didn't look at the ETF on the Bitcoin. So let's do that now, because I think that'll help us to get an idea. All right, so here's GBTC, the Bitcoin ETF. And if you notice on this immediate chart, there is no gap that the market needs to pull back and fill. We have it on the futures though, but not on the GBTC. So that part is interesting to me. So perhaps the gap in the Bitcoin futures will be ignored for the immediate term. Because if you look at GBTC, GBTC is in the trend momentum reading is bullish for GBTC. And the short-term momentum is also bullish. But we do have this neutralization bar going on here. And if you notice, 1, 2, 3, 4, for the last 4 days, the price action has gone nowhere. The neutralization bar is correct. All right, so short-term momentum bullish, trend momentum also bullish, but we got a neutralization bar. So very interesting turn of events. So the bear reading that we got back here, the market said, nah, we want to rally. And this rally alert canceled out this crash alert. So there you go. Interesting turn of events. So if anything, I say the GBTC is showing us that Bitcoin wants to rally, rally further. Okay, now here's the Ethereum ETF. All right, this is ETHE. And if you look at this one, the trend momentum is bearish and the short-term momentum is also bearish. And we got a neutralization bar and flip-floppage with rally and crash alerts here too. So one canceling out the other. We're just moving sideways in the Ethereum. So what do we say? What do we have here? We have a situation where the ETFs are verifying, confirming what the futures are saying. So for the Bitcoin and Ethereum futures, the corresponding ETFs are correct. And that's what we're going to go with. We're going to stick with the corresponding ETFs because they appear to be correct. All right, now we're going to look at some forex and then we'll wrap it up. So right quick, this is the Australian dollar. The ticker is this is the euro currency. The ticker is FXE. And we had a crash alert coming into Friday, but we got a narrow range inside day instead. We have a short-term bearish momentum reading, but we have a trend momentum reading. It's also bear market. So you put those two together and you have a bearish pot of stew that is boiling on the stove. Next up, you have the pound sterling. The ticker is FXB. And we have a bearish trend momentum reading and a short-term bearish momentum reading to boot and a crash alert for Monday. Bottom of the Kumo cloud at 117 is the initial downside target for the pound sterling. And last but not least is the Australian dollar. The ticker is FXA. And we got a crash alert for Monday's trading. And the top of the Kumo cloud at 67 is the downside initial target. And we also got the beginning of a neutralization bar. So questionable whether we see any downside on this rally alert in the near term. It may cause this to stretch out a few more days. Remember, the rally and crash alerts tend to lead the market 3 to 5 days out. All right, folks. So that's all I got for you for tonight. Hopefully you can enjoy the rest of your weekend and have some good trading. Like I said, the PulseWave reports are out. Refresh your browser and you should see them on your dashboard ready for you to jump in there. I think this week is going to be an awesome trading week. We got the FOMC on Wednesday. So markets can do anything. Throughout the years, we've rallied into the meeting. Throughout the years, we've been crashed into the meeting. Throughout the years, we've rallied after the announcement. Throughout the years, we've crashed after the announcement. Throughout the years, we've done nothing leading up to the meeting and then doing nothing after the announcement. So it runs the full gamut. We don't know what we're going to get. I can only tell you what thus say of the algo charts. And that's what I go by. So with that being said, remember that the system works if you work the system. So make money, not excuses. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Smash that like button. Peace.